I think there is a correction going on under the surface, right? So the S&P 500 has not really corrected at all. In fact, it's making new highs every day.
So, yeah, to answer your question, I think the short answer is we expect the chances of a correction coming up.
Everything is so good that it creates a condition that's right for a pullback. And as you know, one of my favorite lines that we use on the show is corrections only feel natural, normal, and healthy until you're actually in one.
I'm sure you get an idea of what I'm going to talk about in this video from watching the clips that I just played. But before we go further, I want you to do me a favor and hit that like button and subscribe button, because I am positive that after watching this video, you will feel a sense of relief, you will feel good, and you will feel that you are on the right track. So here's my take on market conditions. So all the new investors, those who started investing in January, February of this year, or those who are thinking of investing now, or those who invested last month, for the first time, I'm with you. I'm feeling your pain because I know the market has been really bad. For people like me, those who have been in the market since 2008, we are getting hit. We are feeling it. And I can't imagine for people, those who just started, what they will be feeling. Little background. So I have two trading accounts. One account I opened in 2008. The second account I opened last July of 2020. The account that I opened in 2008, that account, I'm still up 160%. 160% in that account, because remember Warren Buffett's word, time in the market always beats timing the market. And I truly believe that. Because I had my portfolio, because I bought Apple at like $20, because I bought Google at like $100, because I bought Amazon at $300, I'm able to see these gains in my portfolio even after the whole market is down. The account that I opened last year in July, in January, I was up 47% on that account. That account is only up by 4%. I'm lucky that it's not in red because I made some good trades. I played smart, so it's not in red. But all my, almost, I would say 40% gain, 45% gain are gone. And in just 2 months. So I feel that new investors, and if you're a new investor, you're watching it, I'm going to show you a few things. I'm going to tell you a few things which are going to help you in the long run to understand how market works and what kind of trades you should be placing now in today's market conditions. Because see, I trade market as a human being. I feel market has a sentiment, market has a temperament, and based on that, I'm doing my trades. So let me share my screen. I have a little presentation, not presentation, but I have a little chart for you to share with you where I see S&P, NASDAQ, Dow, where they are, where I see them go, and what are the trades I'm planning to execute while we are in this rough water. Okay, so here's my screen. All right, so I have here 3 charts. Of course, the first one I'm going to talk about is S&P. So for the first time, S&P last week dropped 1%. S&P hasn't had a big drop like that in a while. If you see here, with all the market condition going on, S&P has been going straight up like this. First time last week, it actually dipped and it actually came to the 21-day moving average. Now, still, the 50-day moving average is at 4,000 mark. Can we see that happen as we go forward? There is a possibility. There is a possibility. That's why all the analysts that I played the video in the beginning of this video are saying that we could see a possible pullback of 7 to 10%. Right now, S&P is at like 42 something, and the 50-day moving average is around close to 4,000 level. So don't be surprised to see that in the next few weeks or next month or so, we can see the dip in the S&P 500. Again, nobody has a crystal ball. It's my belief that we have not seen the actual drop. It's been happening with some of the stocks, especially the growth stocks, so NASDAQ is being hurt, but Dow and S&P 500 are just doing fine, and we could see some kind of a pain coming forward. So now let's look at the second one. So Dow also, with all that going on, you can see that Dow is also going straight up like this. Look, right now. Just like that. It's touching the lines. It's touching sometimes over here, then it's touched sometime here, but then it's not that bad. But again, for the first time, if you notice here, it actually touched the 21-day moving average. I'm going to enlarge it here. You can see that it touched that line here. Their 50-day moving average for Dow is 33,000 right here. And right now, Dow is just over that. It's around 33 something. So could be a possibility that in the short term, we could see Dow dip down. Friday was a good day, but as I told someone, I was talking to somebody and they're like, well, market is doing really good. I was telling them that to me, it's like a kind of a faux rally. It's not a real rally because I don't feel the market temperament. I don't feel that excitement that we had back in September, October, November. You know, when everybody was getting into the stock market, the stocks were making new highs, the tech stocks were rallying. Could be because I'm more on growth stocks, but I have AT&T as well. I have some, blue chips as well. So I feel that right now we could see these kind of pullbacks, these kind of things, because I can see the market being corrected another 7 to 10%. Not everything is going to come down 7 to 10%. Some stocks have already been discounted that. They're already sitting at very attractive level, like the video that I did before, like NEO sitting at like 200-day moving average. It's a great entry point for NEO, but not all companies are there. Look at Dow, like they're making new highs. They are just stomping up. So I feel that we could see that kind of a drop. Now let's talk about NASDAQ. And all you guys, that we see here, we are NASDAQ heavy, because we are in high growth stocks and stuff like that. NASDAQ has been on a roller coaster ride, if you see here, all the way through. But the stocks that we really like and we are in, like the Teslas, the NEOs, all the other stocks, they are hurting. And right now, NASDAQ is almost touching the 50-day moving average right here. So I feel that NASDAQ, can it go to 100-day moving average? Any bad day, any strong sell, tech stock gets hammered. So it could be a possibility that the stock or the market or the NASDAQ could touch that 100-day moving average. And that's where I feel the majority of the buying, and that's where we're going to get the support. Look at this. The last time when it touched the 100-day moving average, look how straight up it jumped. It touched again, it jumped again. So I feel anytime it's kind of touching that 100-day moving average, it gets support and it just runs. So in my opinion, for the next month or two, I think we are going to see some choppiness in the market. That's again my opinion from what I have learned from my experience and what I have seen. Now, how do you trade? And how do you still make money in today's market? And I keep telling people that doesn't matter if the stock market is going down or up. If you have spent enough time in the stock market, you will figure out a way to make money. And trust me, I'm making consistent money every week in the stock market. It doesn't matter if the market is going up and down. Yes, my portfolio is down overall, but it's not that I'm not cashing out even on, these choppy waters. So here's my strategy. Number one is that I am selling covered calls on my positions. Now, I don't sell covered calls on my high conviction stock like Tesla being so volatile, but I sell covered calls for stocks like Google, stocks like Apple, stocks like Shopify. Those kind of stocks I'm selling because I feel they have a huge potential of giving us return on a weekly basis with these covered calls. You have to have 100 shares. You must own 100 shares of something to sell a covered call. And my strategy is very simple. If I have a high conviction on a stock, I do not sell the covered call on Monday for the Friday, because I'm doing every week, remember? Because I want to keep the stock to myself. So I don't want to get rid of the stock. So what I do is I sell the covered calls on Thursday for the Friday expiration. Just one day, Thursday morning by 9:30 to 10, in between that, I do my trades for Friday expiration. That way, the high conviction stocks that I had that I want to keep, and because I bought them at a great price, I'm averaging down, averaging up, however you want to see it. Because I have the number of shares are a lot, so I feel like with the volume, I can make the same kind of money that I would if I were to sell like on a Monday. On few stocks. So I sell on a Thursday for Friday expiration, and for the stocks that I don't mind if they take it away from me for Friday, I do it on a Monday. So there are multiple things that I do with the covered calls. I'm not buying anything right now except Tesla. Tesla is what I'm buying. NEO, I'm buying. Palantir, I'm buying. So the companies that I have high conviction, that I see huge potential going forward, I'm buying those companies. But I'm not buying Apple, I'm not buying Google, I'm not buying any other companies that I don't see my, I would say, price doubling in the next 12 months. I'm not spending money on those because I think we are going to see bottom. It's not bottom yet, in my opinion. I could be completely wrong, but I feel we are going to see a little bit more bottom from here on, another 7 to 10% as some of the analysts say, because I do believe that. In the background, it's happening, but we're going to see some more pain. Okay, Another thing is keep an eye on blue chip companies. I truly believe that companies that are like Apple, Google, Microsoft, Netflix, these are amazing companies. And I feel that owning these companies at these prices are amazing. So I'm keeping an eye. Apple is a great buy. I'm going to do a video on Apple because I see huge catalyst coming for Apple, which is going to push the Apple stock by December. And I have a number as well for that, where I see Apple stock go. So, but I feel that there is a huge opportunity for investors right now to grab these good companies. Apple is not going anywhere, guys. Google is not going anywhere. Microsoft is not going anywhere. So it's a good opportunity to kind of snatch those shares at a discount. It's a sale going on, right? But don't try to time the market. If you want to buy Apple shares, watch the market, watch the charts. Again, I tell everyone that you should learn how to read the charts, because a day opportunity will come in front of you and you can just grab like 10 shares like this or 20 shares like this, and which is amazing because that's how you build your portfolio. Initially I bought like 100 shares of Apple back in 2008, and I've been slowly buying, and I have over 8,000 shares of Apple right now. So I feel like when you buy slowly and average it down, that's how you make your portfolio. That's how you grow in stock market. For growth stocks, as I mentioned, the Teslas, the Neos, the Palantir, NNDM, ARK funds, these are amazing companies. They have amazing future. I average it. Anytime I see a blip in the market, I go buy some shares. Doesn't matter, an hour later, I see the stock even further down. It doesn't phase me out a bit because I feel that I can make money in the long run. I don't have to worry about it. I was not planning on selling this stock anyway for next 5 years. So why should I worry what the price is tomorrow after I bought it today? I don't care. That's the kind of attitude you need to have for the companies that you want to buy in today's market. That if you don't care, if you don't need the money tomorrow, then buy those companies and don't worry about it if the stock price dipped below. Buy more if you can. But do not worry about saying that, oh my God, I bought it for 650 and it's at 600. I made a mistake. Don't worry. But if you want to sell it tomorrow, and if you're just doing day trading, that's a different story. And this is not the video for day trading. That's a separate video, and separate group of companies for day trading. But I feel like, if you want to do something like this, this is how I feel that, again, it's my opinion, a guy on YouTube, it's my opinion that this is how I'm playing these stocks in today's market and making consistent money. I did a video on how I make consistent money using puts, selling puts. I'm going to link it here, but make sure you check out other videos because I know that I provided these kind of values and thrown these names in so many other videos which I believe are good companies that are long-term companies. So I really hope you enjoyed today's video. If you get anything out of it, hit that like, share and subscribe button, and I have a link for Webull in my description below. So take that opportunity. That's a wonderful way to start your investment portfolio. You will get 2 free stocks. I'll get 1 free stock for referring you. Take that opportunity because, again, who doesn't love free? I love free. Last week I got a Disney stock. I love it. Somebody used my referral code. So thank you so much if you're watching. That was wonderful. All right, thank you so much for watching. Until next time, you all have a wonderful day.